Steady gains. Ignore hype. Build steady, predictable returns with rules. Buy low, cut losers fast, compound winners. Small disciplined steps beat big bets. The financial media thrives on hype. Every week there's a new hot stock, a revolutionary investment strategy, or a market prediction that promises extraordinary returns. Ignore all of it. Hype is designed to trigger emotional responses that lead to poor decisions. Steady gains come from steady discipline. Building predictable returns requires a rule-based system. First rule: buy low. This means having the discipline to invest when assets are undervalued, which often feels uncomfortable because it means buying when others are fearful. Second rule: cut losers fast. When an investment thesis breaks, exit quickly. Don't hold on to losing positions hoping they'll recover. Hope is not a strategy. Third rule: compound winners. When an investment performs well, let it run. Don't take profits prematurely just to feel good about a win. Small disciplined steps beat big bets because they reduce risk while maintaining upside. A big bet might pay off spectacularly, but it might also wipe out your capital. Small disciplined steps allow you to survive inevitable mistakes and market downturns. Survival is the first rule of wealth building. You cannot compound returns if you lose your capital. Steady gains also require patience. The market rewards patience more reliably than it rewards cleverness. When you invest consistently over time, you benefit from compounding returns. A 7% annual return doubles your money in 10 years. That might not sound exciting, but it's reliable. And reliability is what allows you to plan your financial future with confidence. Avoid the temptation to constantly adjust your strategy based on short-term results. Every strategy has periods of underperformance. If you abandon a sound strategy during a rough patch, you'll never benefit from its long-term performance. Stick with your rules unless you have strong evidence that the underlying assumptions have changed. Steady gains require emotional control. When the market is up, don't get euphoric and overinvest. When the market is down, don't panic and sell. Maintain your discipline. Follow your rules. Trust the process. Over time, this approach will outperform almost any attempt to time the market or chase trends. Subscribe to Finance Wise Insight for strategies that build wealth through discipline, not luck. Wealth building is fundamentally about making good decisions consistently over time. Each financial decision is an opportunity to move closer to or further from your goals. The quality of your decisions depends on the quality of your information, the clarity of your goals, and the discipline of your execution. Information quality matters because decisions based on bad information lead to bad outcomes. Seek reliable sources. Cross-check facts. Be skeptical of claims that sound too good to be true. In finance, if something sounds too good to be true, it usually is. Develop the habit of asking, what's the catch? What are the risks? What am I not being told? Goal clarity matters because vague goals lead to vague actions. Instead of saying, I want to be wealthy, specify what wealth means to you. Is it a certain net worth? A certain passive income? The ability to retire at a certain age? Once you define wealth precisely, you can work backward to determine what actions will get you there. Execution discipline matters because knowing what to do is worthless if you don't do it. The gap between knowledge and action is where most financial plans fail. Bridge this gap by making your desired actions as easy as possible. Automate investments. Set up alerts for bill payments. Remove friction from good financial behaviors and add friction to bad ones. Financial success also requires emotional regulation. Money triggers powerful emotions: fear, greed, envy, pride. These emotions can override rational decision-making. Develop the ability to recognize when emotions are influencing your choices. Create rules that govern your behavior during emotional states. For example, never make an investment decision when you're feeling euphoric or panicked. Wait 24 hours and reassess.